Hello and welcome everyone to my channel, The Quality Investor. One of the reasons I love investing is that you can generate easy, passive income through the purchase of tiny slices of ownership in businesses. Dividends, typically paid out each quarter, are a great way to increase your income without doing any additional work. Just purchase some shares of a dividend stock and reap the dividends for years. On today's video, I will be discussing 4 dividend growth stocks that you can buy right now and can become the core of a high growth dividend portfolio. I looked at stocks that had at least a 10-year compound annual growth rate of both revenue and dividends of over 10%, as well as a free cash flow payout ratio that is below both their 5 and 10-year averages. When it comes to dividend investing, I believe it is best to stick with high quality businesses that are fundamentally sound rather than chase high yields. Many times, high yields can be a result of a business performing worse than it has in the past, and the market believes the poor performance will continue, thus driving down the share price. However, when screening for businesses that have bright future prospects, generate plenty of cash flow, and have a track record of dividend increases, we can be confident that we are buying great investments. Over time, a quality business will not only appreciate in share price, but also increase its dividend year after year. Investing in dividend growth stocks aligns with my core investment philosophy of buying quality businesses and holding them forever. Not only do we reap the rewards of greater than average returns, we reap the rewards of ever increasing income and dividends without doing anything but holding a great stock. All right, let's get into what such a fund would look like. But first, if you enjoy content like this, please hit that like button and subscribe to the channel. Also, hit that notification bell so you can get notified right away when I post more stock analysis content. We are here on my favorite stock screening tool, stockrover.com. And these 4 stocks are United Health Group, Intuit, KLA, and Microsoft. We're going to start with United Health Group, ticker UNH. United Health Group is one of the largest private health insurers in the world, providing medical benefits to about 53 million members globally, and is a leader in employer-sponsored, self-directed, and government-backed insurance plans. You can see on a 10-year basis here, they've increased their sales by 11.6%. They also currently pay a dividend of $7.52 at a 1.4% yield. They've also done a wonderful job of growing their dividend over 10% on both a 3, 5, and 10-year basis. And we can see they have a free cash flow payout ratio of 26.8%. They also have over 10 years of consecutive dividend growth. Looking down here, you can see just their sales and dividends have increased in lockstep, and you can see a slight downward trend in their free cash flow payout ratio. The next great business on this list is Intuit. Intuit is a provider of small business accounting software, which is QuickBooks and personal tax solutions in TurboTax, and they are one of the largest providers of that in the entire country. Intuit has grown their sales by 13% annually over the last 10 years, currently pays a dividend of $3.60 a share with a 0.6% dividend yield. And on a 3, 5, and 10-year basis, they have grown their dividends nicely, over 10% each year in that range. They also have a free cash flow payout ratio of 21.3% and 9 years of consecutive growth, suggesting a long runway of growth ahead. We can see here that their sales are a little bit cyclical, but they've also had a nice increase in that dividend, and they've also kept that free cash flow payout ratio nice and low. The next business is KLA. KLA is one of the largest semiconductor wafer fabrication equipment manufacturers in the world. They specialize in the market segment of semiconductor process control, wherein machines inspect semiconductor wafers during research and development and manufacturing for defects and verify precise measurements. In this section of the market, KLA KLA holds a majority share. We can see here they've grown their sales in the last 10 years at 13.8% per annum. They currently pay a dividend of $5.80 at a 1% dividend yield. And on a 3, 5, and 10-year basis, they have not only grown their dividends over 10% annually, they've increased the amount of dividends they pay out in each of these segments. They also have a free cash flow payout ratio of 25% and over 10 years of dividend growth. We can see here that this free cash flow payout ratio has fallen a lot in the last 10 years, and we can just see nothing but an upward trend in both their sales and their dividends. The final business on this list is Microsoft. Microsoft needs no introduction. However, they are known for their Windows operating system and Office productivity suite. The company is organized into 3 equally sized broad segments: productivity and business processes, which is the legacy Microsoft Office, cloud-based 365, Exchange, SharePoint, and so on; Intelligence Cloud, which is infrastructure and platform as a service offerings such as Azure, Windows Server OS, and SQL Server; and more personal computing like Windows Client, Xbox, and more. The last 10 years has seen Microsoft grow to nearly $3 trillion in market cap. They've grown their sales annually in the last 10 years at 10.5%, and they currently pay a dividend of $3 per share at a 0.8% yield. And like clockwork, they increase that dividend every single year by 10%. They have a free cash flow payout ratio at 35.5% and currently have over 10 years of consecutive dividend growth and are poised to become a dividend aristocrat in the next few years. We can see here they've had excellent dividend growth and sales growth, and I love the downward trend in their free cash flow payout ratio. While historically each of these businesses has done great at growing their businesses, we also want to make sure that they can do that continuing into the future. And we can see next year, EPS next year estimates. These are based on analyst estimates here. Each of these businesses has over 10% EPS growth projected in the next year. These 4 businesses are all very fundamentally sound businesses with long runways for growth into the future. And United Health Group, Intuit, KLA, and Microsoft would be a great foundation for any dividend growth portfolio. So there you have it. 4 amazing high quality businesses that can generate passive income for years to come by holding these businesses in your portfolio. Before we go, I do want to emphasize that this is not financial advice, and while I don't own all 4 of these stocks, I do own UNH and MSFT. With that, thank you for watching today's video. And what do you think? I love the feedback, so please comment below with your thoughts. Also, please hit that like button. And if you found this info helpful, subscribe to the channel and join our community. Thank you and happy investing.